Economists are predicting the South African Reserve Bank is likely to cut the repo rate further today by as much as 50 basis points. Last month, the central bank cut the rate by 100 basis points, bringing the repo rate down to 4.25%. The prime lending rate now stands at 7.75%. The question then is not if, but by how much. From Econometrics, Dr. Azar Jammine, good afternoon to you and welcome. 25 to 50 basis points cut predicted. What are you expecting?
I think that is a fair prediction, certainly 50 basis points, because in the last few months we've become accustomed to even bigger reductions of 100 basis points. So I think with the opportunity being available there, the Reserve Bank may well cut by 50 basis points. Some economists are calling for 100 basis points. So I think 50 will at least satisfy the majority of people.
For the purposes of this discussion, let's settle on 50 basis points. Then how much of a real stimulus will it be?
I think it's a meaningful stimulus, especially when it comes back on the following 225 basis points of cuts since January this year, which would add up to 275 basis points after this 50 basis point cut, off a base of 650. That means that interest rates will have been reduced by almost a half. That means that people's debt servicing costs will have fallen by nearly a half, certainly by more than 40% since January. That's a heck of a bonus to those people who are indebted.
Dr. Jammine, you'll also be looking for the broader macro picture, the commentary. We already have slipped into a recession at the end of 2019. There are now predictions that we could contract by double digits this year. Again, you'll be looking for clues for reference from the governor.
Most definitely. Unfortunately, the whole issue of forecasting what the impact of the lockdown is going to be on the growth rate of the economy has become fraught with massive variations. But certainly the extension of the lockdown through to the end of May has made economists downgrade their forecasts from levels of around -5%, -6% to at least -10%, and some are even saying it could be as deep as -17%. Certainly that's what Business for South Africa was suggesting. So it's in that light that we are seeing the reduction in interest rates as being absolutely essential to provide some respite to individuals. But of course it's going to hammer older people who rely on interest earnings on their savings to survive.
That's always the trade-off, isn't it? Dr. Azar Jammine, Chief Economist at Econometrics. Thank you very much for joining us. Let's go to Devin Murrigan now at the Money Desk. As we've just mentioned, Devin, the Reserve Bank expected to cut rates again this afternoon. Dr. Jammine, you've just heard talking about 50 basis points. This is after bringing significant relief to consumers in March and in April, 2 percentage points. So, Devin, let's move on with the business report. What is the Monetary Policy Committee considering then ahead of this afternoon's announcement?
Well, a couple of things. I mean, I think the economist Azar Jammine, they're really putting it in perspective. But I think one of the most important things that the Reserve Bank considers, Jeremy, is the fact that if the environment is fertile in terms of inflation, that's when they cut. But this huge slide in the graphic you see in front of you shows how aggressive, very uncharacteristically of the Reserve Bank, mind you, that the bank has been since January. The repo rate, 6.25% in January. It's now dropped to 4.25%. Let me tell you what that means. That means if you were paying a bond of R1 million on a house, you would be saving since January around about 1,200 rand. That's a lot of money. And now what economists are saying, that the ground is still fertile given the COVID-19 impact. Consumers need more help.
These announcements that we talk about with a great deal of interest are often very theoretical. The question, Devin, is the lead time. How long before consumers would feel any meaningful effect of a downward adjustment to rates?
And there's always a difference between how long it takes for a consumer to feel it and the broader economy. I want to just answer that, revisiting the slide in front of you now. The repo rate, that's the rate that the Reserve Bank charges banks is 4.2% currently, and there's that 7.75% that banks lend to consumers. So, given 3, 4, 5 months of this liquidity that's now added in the pockets of consumers, it could start showing some relief in the next few months. But Jeremy, remember, would people have as many jobs as they had before this crisis hit? How much can the Reserve Bank really stimulate the economy? And again, the Reserve Bank governor this afternoon is expected to call for more structural changes to ensure that investment starts bringing up in this country.
And very quickly, one has got to assume, again, having listened to the views of Dr. Jamin from Econometrics, that analysts, commentators would be on the same page that another cut is needed.
Yeah, not everyone, though. There are some people this afternoon that are saying, look, we don't know what August and September has in store for us in terms of the impact of this COVID-19 pandemic. Why doesn't the Reserve Bank hold off a little bit? You've given us 2 percentage points or around about 2 percentage points of a cut. We never know what the economy would look like come August and September, and you might need that ammunition to go ahead and cut then, so hold off. But here's Safiso Skinjana from IQ Business on what he thinks.
We must remember the mandate of the South African Reserve Bank is price stability in the context of sustainable economic growth. And in our view, there will be 3 primary considerations of the MPC. It would be the state of the household in South Africa, given the fact that household expenditure makes up 60% of GDP. And therefore, given the looming job losses, given that people are working reduced hours, as well as that some companies have already closed, we expect household income to be lower. In addition to the fact that we're already seeing a rise in distressed lending, again, which means that households are certainly under a lot of pressure. Over and above that, one of the other considerations, of course, would be the price path, which talks to inflation expectations. Again, we've seen the rand bounce back after having weakened materially after the downgrade, and certainly that also then, given also the food inflation also looking a little bit softer, certainly means that the consideration would be for a downward trend on interest rate expectations, and so we expect that the Reserve Bank might reduce interest rates.
So, Jeremy, ahead of that interest rate announcement, the rand is a bit softer, but world markets are down today. It's really been a few weeks of swinging from positive to negative sentiment, despite, mind you, the last few days of significant gains for world markets, including the JSE. But today there are concerns about hostilities between the 2 biggest economies, the US and China, as President Trump accuses President Xi Jinping of being behind a disinformation and propaganda attack on the US and Europe. So it's got markets down. Here's a look at the numbers.
Those are the local market numbers. Devin Murrigan, thank you very much indeed. We'll hear from the Governor of the Reserve Bank mid-afternoon.